Right. Good afternoon to everyone. Thank you for taking the time to be with us over lunch today. My name is Wan Ying Lim. I am a director at Bank Julius Baer and co-chair of Women in Business Committee here at the British Chamber. Today, I'll be moderating our webinar on investing with purpose, organized in collaboration with the Finance and Fintech Committee. This event sits under the Chamber's theme of Road to Net Zero. This event was born from the committee's agreed passion for using finance for good. It has never felt more pressing, especially with the macro backdrop of coronavirus and the harsh realities we are facing and rising inequality between the rich and the poor. We also bore witness to Greta Thunberg's rise in notoriety regarding climate change, to other pressing issues like Black Lives Matter, overconsumption that leads to poor ocean health and loss of biodiversity. The list goes on here, but the one that particularly disturbs me and the Women in Business Committee is capital funding for women. Why are women only raising 2.3% of VC funding versus all the rest for men? I quote this statistic from Crunchbase. So we know that investing in women is empowering from the bottom of the pyramid all the way to the upper echelons of corporations. Why these paltry statistics still exist? So to everyone present here today, I invite you to think about your definition of success. How do you define it? Do you only think about the number of zeros in your bank account? I ask for us all to be reminded of the bank of time. So every morning we wake up, we're credited with 86,400 seconds. And every night when we go to bed, whatever of this you have failed to invest to a good purpose gets written off as lost. Now, this may translate to time well spent with your family, your aging parents, a music chord you perfected with your guitar, or a breakthrough moment of pure professional excellence, but it could easily be a worthy investment you made towards sustainable growth. Investing with purpose asks of you to expand your expectations of what your money does for you above and beyond just a profit. Now, in book terms, investing with purpose means to integrate ESG considerations into the investment process to quantify risks, opportunities, and durable competitive advantages. For this talk today, purpose represents the essence of our speaker panel's humanity, paired with the influence of capital. So investing with ESG considerations is not a novel concept. In fact, it's about 2 decades old. We're not really here to speak to you about the world's problems and the 17 SDGs. We're here to talk to you about the solutions and how we can use finance for good. We will learn from our panel's investment and fundraising experiences with these ESG considerations, as well as the biases you may have and the pitfalls that you may face. As we get fueled to use finance for good, our panelists will also share with you how to discern between companies who greenwash, those who are reactive or proactive about it. So without further ado, I open the floor to the panel. Please do engage with our speakers today by typing in your questions. I will start with a very short introduction on all the speakers. We will start with Mr. Sudeep Sarma. He is Managing Director at Startup O, Tech VC Fund. He helms decades of experience as a general manager. He was the former head of Asia Research and Global COO of Barclays Investment Bank. Prior to that, he held management positions in Boston Consulting Group and Aviva. Then we have Virginia Tan, founder of Lean in China, now boasting over 100,000 members, founder of Girls in Tech, the largest global not-for-profit competition for, you guessed it, Girls in Tech, and she has Asia's first gender lens VC fund. Next speaker is Andrea Adjuhao, global partner and co-head of capital at Antler. Antler is a global early stage venture capital firm whose numbers are both inspiring and speak volumes. She is a former banker from Goldman Sachs and HSBC. She volunteers her time for AIDA, and she is an FWAS ambassador supporting women in finance. Last but definitely not least, we have Dr. Elaine Kim, a palliative doctor, angel investor, serial entrepreneur, and female advocate. She is the founder of Crib and Treehouse, based in Funan Mall, and she's a mother of 3. So I'd like to kick off the panel by asking each speaker to take a few minutes to introduce themselves, their firms, and why investing with purpose is important to them. Over to you, Sudeep.
Thank you, Wan Ying, very much for the kind introduction, and hello, everybody. So first of all, I'm Sudeep Sarma. I've been in Singapore now for 7 years, came over from the UK working with Barclays, as you just heard, and I think Wan Ying just promoted me there to global COO. It was just the research function rather than the whole of the bank. So I came over with my family, 2 boys and my wife, and we're obviously loving it here and committed to staying in the region. And it's through Barclays that I first got connected to BritCham as well. In terms of professionally, so about a year ago, I joined a company called Startup O, and what we do as a company is focus on trying to help build great technology companies together with deserving founders. And we do that by really 3 key activities on our global technology platform. The first is discovering those deserving founders. And the second and third are to help them grow through access to capital and then also through cross-border business scaling. And my personal involvement within Startup O is mainly focused on that last activity, which is helping companies to grow across borders and aid their international expansions, including therefore, of course, the impact it has on valuations. When it comes to investing with purpose, and I think one of the questions that I was asked in anticipation of this was, which of the 17 SDGs most matters to me? And a bit of a digression, if you don't mind, but I recall a story of talking to a parent who had many children, and he was asked, "Do you have a favorite child?" And his response was yes, but it just changes day to day. And that's probably how I feel about the 17 SDGs, that they're all clearly relevant, but to talk about what matters most also significantly influenced by what I see happening and the things that I'm working on at a given moment in time. So off the back of the weekend news, I'm probably most focused on climate change and the topics that are rising there. But if I were to be sort of more honest with myself and think about what's resonated most for me over time, it's mainly to do with inequality and social inclusion and the issues that are arising out of the absence of that at the moment. And I think technology is, on the one hand, accelerating that divide, but I think also proving itself to be an enabler for leveling the playing field as well. And the second part of it is what excites me. And as it happens, it ties in also with, among the core goals of Startup O, that what we're trying to do as a company is level that playing field around access to capital for founders, reduce the dependence on your personal networks, and use the term sort of democratize access to capital. And that's a term you hear. The idea of democratization is a term that's growing in significance and prevalence, but I think it also speaks to people wanting to address that challenge as well. Thank you.
Thank you so much for that, Sudeep. Virginia, would you like to present yourself?
Absolutely. Thank you, Wan Ying. I'm delighted to be here. So I'm the founding partner of Teja Ventures, which is a venture capital fund focused on consumer technology and with a gender lens. I think what that essentially means is we really focus on investing at the intersection of technology and what we call the she economy or the female economy. Now, we can talk a bit more about what that actually means later, but I mean, and I never really thought that I would ever be in investing or venture capital. And I think what really brought me down this road simply was that I was a lawyer and a banker, corporate career. That took me around the world. I ended up in China about 8 years ago, and my life changed dramatically while I was there as a lawyer. We started building communities for women. We built what became one of China's largest nonprofits called Lean in China, and the community spread all across China. Out of that came two things. One is we essentially incubated a global competition called She Loves Tech, which is now the largest startup competition for women in technology in the world. This year it's in 50 countries, including the UK, where I actually spent 10 years. And out of that, this is back people like Sequoia, people like Temasek's funds, Amazon, Tim Draper invest in a lot of our startup companies, and that's what really inspired me to build a fund. But I myself get quite tired of diversity statistics. I actually rarely use the 2% figure that Wan Ying used. In fact, in Southeast Asia, it's even worse than that. In Southeast Asia, I think if you're a sole female founder, I think it's something like less than 1%, 0.9% actually, of venture capital funding. But if you are a team, a mixed team, a team with a female co-founder, I think it's like more like 16.9% in a place like Southeast Asia. I think what I wanted to focus more with when building Tasia was I really wanted to use Tasia to build the business case for investing with a gender lens, which goes beyond investing in one single woman. It was really looking at companies which leverage women as an entire demographic, as consumers, as traffic, as mobile workforces, and how the internet economy was really allowing women to both be drivers and beneficiaries of this. And I think the biggest elephant in the room is I think the minute you talk about gender or gender lens investing, I think with many conventional investors, half the mind
I think we're having technical difficulties.
Wan-Ying, if we could just move on to the next speaker, please.
Yes, apologies for that. Andrea, would you like
we just left it on a cliffhanger. No worries.
Yeah.
I'll take over from there when she joins. Thank you very much. So my name is Andrea Hoidu-Howe. I'm one of the global partners at Antler. I have been in Singapore for 11 years, very similar path as Sadeep. I arrived in Singapore almost 11 years ago on an international secondment with HSBC, where I spent 11 years altogether. I then spent a few years at Goldman Sachs here in Singapore and met a bunch of very accomplished individuals who back in 2017 started thinking about building Antler, which is a global venture capital firm. I'll tell you a little bit more about what we do and who we are. And I left Goldman Sachs in 2018 to be one of the early partners. My specific remit is to ensure that we have a systematic way of raising capital for all of Antler products across the globe. Antler is, although headquartered in Singapore, very uniquely is a global firm. We are now in 16 different cities, large tech ecosystems across the globe, from Australia all the way to the United States. And what we do is we invest very early stage, pre-seed, all the way up to Series C at the moment. And just like Sadeep said, I think we've got a very similar mission to Startup O. We just do it across the globe. We're looking for exceptional individuals, and we're looking to democratize access to not just venture capital funding, but I think very importantly to networks that will enable exceptional individuals to solve the problems of today, right? And those pressing problems. As for purpose, I think it's a very interesting topic, right? Because the issue with purpose is that there's a lot of finance people on this call, I assume, and we're all very used to being able to measure things, right? So when you look at a P&L, you know exactly how a company is doing, and when you look at a balance sheet, you're able to see, okay, what is the assets and liabilities of the company. The thing with purpose is that the actual proxy measurement that we're all talking about, which is the 17 SDGs, is just one way of looking at it. Not only that, but the other issue with it is that it's very, very subjective. So what matters to me and why I might pick to invest in a company might not matter to you, and so on. So I think the 17 SDGs, which I think most financial institutions adopt as their framework for measuring purpose and measuring ESG, is just one camera angle. And so I think about this a lot. I think when you sit at the private side of the asset pool, and within that you are a very early stage investor, I think by definition, a lot of the things that come across our desk and what we're looking at to invest in will have a very, very strong purpose element. Because it's early stage, the founders are driven to do good, but also to build businesses. And I think the themes that have emerged over the last few years are very, it's very apparent. Some of them Van Ying has listed out, that, they have become the most favorite topics to kind of, or problems to solve for. So in summary, I look forward to discussing this further with you guys. I think looking forward to figuring out what purpose means to each of you.
Thank you, Andrea. Over to you, Elaine.
Thank you so much, Wan Ying, and it's a pleasure to be here today. My name is Elaine. I am from Singapore. I would say that this topic is something that's really important to me because I think making sure that my life is driven by purpose has always been a very core thing. So I'm a doctor by profession. I do palliative care. I've been in palliative care looking after terminally ill patients, so that's somewhat purposeful, but I'm also an entrepreneur as well as an investor. As an entrepreneur, I've started a number of businesses, had a couple of good exits, but currently what I'm working on the most is this business called Tray House. And again, this was something that was started based upon purpose as well, because we started out trying to solve problems that I faced myself as a working parent. And so Tray House is we have a space, a business club that also has a creche, a nursery, so that parents can work and place their kids in the childcare or the creche just a few steps away from each other. I think this really was just trying to solve the issue of finding work-family balance and work-life integration for working parents and their families, and to really bring families closer together without having to make people choose between career and family. Since then, it's also evolved a lot more. Tray House has evolved a lot more into an education business. We actually have a preschool and childcare called Tray House School. And this, again, was very, very purposefully created with the intent to raise the change makers of the future, to really relook at what's important for the early years, what our kids really need to succeed in a very different world of the future, focusing on things like grit, empathy, resilience, curiosity, creativity, and kind of building an entire education for the early years based upon that, and really raising kids in a very holistic way, not just focus on the academics. And language and literacy is important to us, but really raising them with the right character, integrity, and a lot of skills. So that's what we've started. We've started a preschool and childcare that takes kids from 18 months to 6 years old, and we've been building an amazing curriculum over the many years that we've been running it, and we're also building an educational technology platform. So that's the business that I'm really working on right now. But as a female entrepreneur, I think what Wan Ying had talked about, Virginia had touched on as well before we lost her, is something that resonates a lot with me also. So as a female entrepreneur, I do find that women do face pretty significant challenges that are quite specific to and I'm sure we'll go into this a little bit more. But because of that, I'm also the co-founder of an organization, a nonprofit social enterprise called CRIB, C-R-I-B. And this is actually an organization that empowers women to become successful entrepreneurs. And we do this through a number of ways. We have a CRIB Society, which provides networking, opportunities, mentorship. We have CRIB Match, which actually matches co-founders as well as co-founders with investors. And we also have CRIB Equip, which provides training. We work with a lot of different companies to really upskill and really make sure that the women entrepreneurs have what they need to really succeed. And so really addressing all the issues that sometimes puts women on a different footing, and really trying to level the playing field by providing all the support for them. So that's what we do at CRIB. And I'm an investor myself. I've been invested in a number of companies, an angel investor. My husband's a VC as well. He actually has a sustainability focused VC fund called Amasia that's focused on climate change. And I think all of us are just really trying to do things that are based upon building companies as well as investing in companies that are focused on creating value and purpose. And so one of the other things that we do at CRIB is we have an Angels Club called the CRIB Angels Club, which is made up of high net worth individuals, VCs, angel investors that are interested in funding women-led startups as well. And we have a program called Pitch Perfect, which actually brings together potential investors with our fantastic female founders to try and help them secure the funding. So those are a couple of things that I do. Again, all driven by a singular desire to create a positive impact in society. I think what Sudip said earlier about which UN SDG is important. It's true, all of them are important, right? But I guess for me, it's quite clear that education is something that's really I'm passionate about. Wanning mentioned I'm a mom of 3, and really Treehouse School was created because I wanted the best kind of education I could possibly give to my own children. I didn't feel it existed, and that's why Treehouse School exists. I wanted to be present for my family while having a career. I didn't feel that exists, so I was solving that problem by creating Treehouse to provide the workspace with the childcare. So really that is very important, and of course gender inequality, really trying to support women, at least in the space of female founders. But I think it's a add-on effect, right? If you support female founders, you'll get more, and you have more female investors. You'll see more female founders getting funded with VC funding. A big reason why you don't see people in the C-suite is because they don't get the chance to build the companies, to develop C-suites. You don't see enough role models of women in the C-suite. And so I think it's got a knock-on effect. If we support female founders, we invest in more women businesses, we raise up more people in the workplace, I think it'll just really solve a lot for the gender inequality. So yeah, that's me in a nutshell. And I'm always happy to support anyone. If anyone wants to reach out to me for any reason, just reach out to me. I'm happy to be helpful.
Thank you so much, Elaine. You are such an inspiration. I believe Virginia has come back. Virginia, yeah, sorry to miss you for a bit. Did you want to just finish?
Yeah,
finish your introduction?
No worries. No worries. I was almost done actually. I think the only thing I was really saying is that what I've learned in a painful but also rewarding way of the last couple of years as I build up my own VC fund is actually the minute you bring gender on, even by calling it gender lens investing, even once you bring gender into the conversation, it is actually the elephant in the room actually is that the majority of conventional investors will automatically switch off in their head. Because I think this is what subconscious bias is. And I understand that. I think there are two subconscious biases at play here. One, I think, is that somehow people think that when you invest with purpose or with a social impact, then it must be concessionary in some way. So that's the first subconscious bias, right? Because in a way, I think we're too used to making money out of oil and gas, diamonds, and a whole bunch of things. The second subconscious bias, I think, is that people assume that investing in women or gender lens investing, again, is something that you do for social purposes, something you do for almost like charity. So but actually it's not something which makes you money. So with those two in mind, good to have learned it firsthand, but it's really shaped, it's upset me at many times, but it's also really shaped the way, I now go about building the fund. And also as I launch the next couple of funds, sometimes the truth hurts, but it's good to face that sort of straight on. Yeah. Thank you, Wan Ying.
Thank you, Virginia. In fact, we are going to be we'll be touching on the investment biases, and thank you for sharing this incredible learning. I'd like to go on to sort of the investment trends that perhaps the VCs on the webinar can share with us. What are some investment trends in this SDG purpose-driven space really exciting you? Can you share some with us, Andrea?
Yeah, I think that one of the key trends that we have observed is that if we call this purpose-driven investing, is that actually institutional investors are no longer really investing in this. When doing the due diligence, institutional investors will shy away from investing in anything that would potentially harm their reputation. And therefore, I think what we see is that the ESG lens is finding its way into the part of the due diligence more and more seriously. So I think that that also means that, as a response to that, managers are also looking at this particular topic a lot more seriously. And so, there is, again, it comes back to it's a sort of chain reaction, which is how do you make the investment decisions as a manager, number one, and into that investment decision, how do you actually factor into, for example, the ESG lens of investing, and then in turn, you know, how are you able to show this to your investors and other stakeholders that you've actually considered this? So as I said before, SDGs tend to typically be the framework that a lot of the managers have chose to adopt. You know, Antler is a signatory to the UN PRI, which is the United Nations largest initiative around responsible investing. Also, if you are a European institutional investor, then there is also another framework called SFDR, which is the Sustainable Financial Directive. It's a full. So from an institutional investor's perspective, it's really no longer a good to have. It's an absolute must. I think it's expected of them that to be able to report back to their stakeholders of how their investments are thinking about this. So with regards to this, of course, there is a wide variety of outcomes. It could be from, you know, diversity with regards to gender or equality around education, or solving for things like climate change. And I think that the critical thing is, as a VC, as Antler, who invests across the board, is to be able to recognize what SDG our portfolio companies are working towards, and then be able to capture over time and measure over time the actual impact that these portfolio companies have.
That's great. Thank you for sharing. In fact, it's you're right. It's not a nice to have. It's an absolute must have. I mean, when I think about the products that are now in the bank sphere, ESG is kind of, you always have to have a recommendation that has some ESG form. Sudeep, are you seeing any investment trends that really excites you?
I would certainly echo Andrea's comments. I'd say in the context of sort of family offices and high net worth individuals, what we're seeing is certainly a lot of interest, and that interest varies by person, echoing what we discussed earlier. But probably just we're seeing more desire to invest on a single basis rather than necessarily in a fund. And that again aligns to what do they care about. So just saying you've got a fund that's going to do things that are focused on ESG is not a narrow enough topic to capture that investing with purpose. I think the other thing I'd say is, you know, and personally what excites me is the idea of 20 years ago, there's probably a sense of you trading off between the social impact you're making and the investment returns. And that idea was complete fallacy. It could be proven to be fallacy in regards to things like diversity and management levels and things like that. There was enough data to prove that otherwise. But when it came to things like climate change, it was less clear cut 20 years ago. You know, it was going to cost more. You didn't know what the returns were going to be. And I think that that's changed now. And that means that there's just a really exciting time to be able to invest in things that will have an impact and not necessarily sacrifice returns. And the reason for that is the enabling technologies are obviously reducing the costs of adoption. As governments and corporates sign up to their goals, they need solutions to achieve those goals, which is going to drive demand up as well. And so with that growing demand and the opportunity for lower costs to service that demand, you're going to see a lot of really exciting investment opportunities as well. And so that trade-off doesn't need to be quite as strong as it was in the past.
Wan Ying, if I may round out, you know, the two other speakers. In the last 2 years since we set up Teja, we've ended up investing in things which I think we completely had not envisioned, just because of the way I think the market is moving. So you know, we ended up investing in things like, for example, a lot of food technology, the circular economy, you know, sort of responsible consumption, a lot of things that we're actually seeing now as I'm, you know, preparing to launch, you know, the next fund we're looking at. obviously future of food, a lot of things, you know, I always love the concept of new retail, but I think the pandemic has only sort of accelerated, you know, the trend of that. I think sustainability is no longer just social. It's actually sustainability is becoming commercial, right? Whether that's because climate change is becoming real, or because of, you know, there's a lot more ESG money now sort of directed towards climate. But I think it's actually, you know, about finding really real solutions, right, from on a day-to-day basis, right, versus like some lofty thing which can remove CO2 from our atmosphere. And I think, to me, that's the biggest trend that I see, right? I don't think we're necessarily there yet on gender, to be very honest with you, but I definitely see sustainability as becoming a commercial. It becomes a business driver now. And what I'm seeing from large MNCs, whether it's the likes of IKEA, Unilever, and others, you know, big plastic producers, you know, all of a sudden they're very interested in either investing, you know, in these things, investing with us, and so on and so forth. That was not something I expected. I'm particularly excited about the future of food, because this really plays to our strengths in Southeast Asia, you know, in terms of the strength of our agricultural supply chains. We have some of the best food in the world, you know, I mean, some things have just accelerated because of this pandemic. Fintech is something which has taken off in a huge way, continues to do so. I think the unbanked now, you know, I'm becoming sort of I mean, it was always, we always knew that was the gap, but I think now that is, again, also becoming very commercial, whether it's neobanks or other types of solutions. The other piece as well, which I definitely see and influence a lot by my time actually in China, is what I see as the content economy. You know, like basically the way that we actually consume services, first goods and then actually services. A lot of times, the way the pandemic has really impacted us is the way we, you know, the way these things are distributed to us, right? Omni-channel versus single channel, and in a increasingly digital economy, content is actually king. So those are the things that I see, and I think one core to such service is education, also healthcare. So those are the things that we continue to double down on, and yeah, I'm really excited about it actually, and they happen to hit a lot of your SDGs, I think. Yeah,
absolutely. I think all of them. So, well, let's go on to pitfalls. So when we have companies that say they are filled with purpose and they are good for the world, how do we discern between those companies that are greenwashing and those who are truly aligned with their purpose? Or is profitability simply good enough? I open this to the panel.
I'm gonna chime in a little bit here. So I you know, everything that the others have said so far, it completely resonates with me. And you know, when we talk about ESG investing, I think like what Sudhit said, at one point of time, it really was like this very niche sort of a area of investing. And I really am hopeful and believing that it's absolutely possible and actually more likely that you don't have to have a trade-off between profitability and purpose, and that soon we'll see a world where it's not just ESG investing versus investing. All investing has to have an ESG focus, because institutions and just the culture of investors as a whole, they won't be able to raise the capital that they need to do the investments unless there was a responsibility in the ways that companies are run. So I'm hoping that in this question about pitfalls, we will come to a point where we'd be able to evaluate businesses just purely based on what the business is, and it's not does it also have an ESG angle, but it really is like what does the company do and everything that they do, and does it all align, and when we're evaluating businesses, I think it just always comes down to the same few things, right? Like they call like the T's, right? Like you look at the traction, you look at the total addressable market of the business, you look at the team. And I think, you know, a very, very big important part of looking at investments in any space. And I'm trying to not have to differentiate between like ESG investing and just normal investing. We should just look at companies as all companies should have responsibility, sustainability in the way that they run it. They should address some sort of purpose, and then you look at it with the normal way you just look at any business, I suppose, and you evaluate any business. And I think, yeah, I think especially in early stage investing, the team part is really important. Being able to talk to the founders, understand where they're at, where their heart is at, whether they truly have an intent to make the world a bit better in one way or other, right? And with what they're doing, what problem are they trying to solve? Are they trying to solve a problem that will create a positive impact on society? And I think it will come to a point where I hope that all investors will just not even look at a business unless there was some kind of positive impact that was going to be made on society. And so, you know, it doesn't become like, oh, you choose between profit or purpose. You just need to have both profit and purpose. And in fact, where there's purpose, the profit will follow. I really do believe in this intersection, and I do believe that it will continue that way. So,
Wan Ying, these are some of my thoughts on some of the pitfalls. I think what Elaine said on intentionality was actually spot on. So my issue, the issue that I have with increased ESG investing actually is that a major plastic producer could have a very, very good ESG score because, for example, they're energy efficient. They are, they might have a very diverse workforce, and they may contribute a lot to their community and have a great governance. But at the end of the day, they're still massive plastic polluters. So I think, two main thoughts I had, right? It's about, as an investor, you allocate capital and you have the power to actually choose innovation, right? So, it's one thing to say, okay, I'm just going to choose a great oil and gas company or a pollution company, a plastic company, which has great ESG score, which is a lot of, I think, I see that especially in more like public type funds. When there's no real intentionality, it just seems to, it just makes the score. The great thing about venture capital is that, your job as a venture capitalist, the best part of the job is to be able to imagine what the future is like before others and really place your bets there. And this is where I believe, putting your bet into innovation, can pay off. The key, right, with sustainability being commercial is this, right? What was sustainable yesterday is becoming commercial today. When I think one of the questions you had asked, some of the panelists was that, what are examples of financially successful companies that are responsible and highly impactful, such that we don't keep thinking that there's a concessionary part of it? And I think a great example of that in today's terms is Tesla, right? But who was to think that a company like that could have a 700 billion market cap? Because there were many, many, many times when what he was doing was seen as not necessarily the most commercial thing, just something good for the world. So I think where the game changer is, so that we don't necessarily need to have that concession, right, between impact and also financial success, is when you have technology. Because I think technology is what can be the real value driver. And that's what, we venture capitalists are really betting on. Because at the end of the day, Tesla sells less cars than GM still. But when it comes to something like their technology, they're eons ahead. And that's why they are priced commercially. Yeah.
Thank you so much for that, Virginia. Spot on. I wanted to Sudeepa and Andrea, did you want to chime in?
No, I was very surprised, Virginia, that you picked Tesla, just because I think you brought up one point a minute earlier, which was the entire value chain and looking at the impact of the entire value chain. If you actually looked at where all the things are being manufactured and the actual raw material that is being used, and you put all of that together, I'm not sure we would come to the same conclusion when it comes to Tesla, although the technology is really good and I'm a great supporter of it. But I think you made a great point earlier. I'm just surprised by your example, which was Tesla, just because I think the broader definition of it, of where are we getting these raw materials, what are they, if you actually follow the plastic bottle, which is an easy one to follow, where was it manufactured, where is the raw materials from, it's kind of like an easy one to follow. But when you put together a car, or when you put together really complicated things, I think the measurement of that is very difficult. And here is why I think subjectivity when it comes to ESG, like we are still unable to measure this correctly. Right, we're just not possible, especially not for large public companies. We've got some proxy scores, but they don't go end to end. They kind of take a snap. It's almost like a balance sheet, like take a snapshot. So yeah, I thought that was quite interesting.
Just on the supply chain point, just to say that on the supply chain point, I think that what we're seeing, because as Andrea quite rightly points out, I think these frameworks have they have value and they have purpose, but they only take us so far. So, amongst the things that we've seen work is, when you're talking with the founders, asking questions such as that supply, like who have you partnered with? What chose that decision to buy from there versus someone else? And then you start to get a feel for, is that founder actually driven by the purpose, or is it an expedient thing to try to raise money and greenwash in that way? So just to add on that side.
Thank you for that, Sujit. My next question, one very close to our hearts for the Women in Business Committee, is on gender lens investing. So the statistics show clearly that women have less access to capital around the globe. This is true in emerging markets, the global south, here in Asia, and it's true in tech startups in Silicon Valley. So the scale, shape, consequences of the problem are different, of course, but the fundamental issue is exactly the same. We know that empowering women economically creates a virtuous circle. It lifts the poverty line, because a dollar invested into the woman generally more of that dollar goes back into families and communities when compared to investing the dollar in men. So, and financial performance of companies with female executives repeatedly outperform. Can you share any of your own experiences when it comes to capital raising, either for female entrepreneurs or for your own funds? And what makes the successful ones different from the rest? Is it a gender issue? Or can a gender label actually detract from this capital raising? So I open to the panel, because I think that actually all of you can probably answer this.
So I would love to start with this, right? Because we have quite an extensive experience with this. The way we start the origination for our deal flow at Antler is we start with talented individuals. So the funnel for us is an extremely broad funnel. And what we actually believe, which is not revolutionary, is that talent comes in all forms, right? And so what ultimately needs to happen is that the outputs of the companies that Antler ultimately invests in represents variety, represents diversity. So what we see is that we receive about 50,000 applications a year across the globe to be able to join the Antler platform. We end up selecting the top 3% of the applications. But what's actually really interesting is that systematically about 20 to 25% of the cohorts are female. And then retrospectively, what we've noticed is actually, if you're just focusing on the female angle, is that they typically tend to be somewhat more successful at securing capital from Antler. At this point in time, 38% of all of our portfolio companies have at least one female co-founder. And even more interestingly, just over 80% of those cases, the female co-founder is the CEO. So, Virginia, you said something very interesting before around, when you were referencing Wan Ying's statistics, it resonated with me because actually it's not necessarily true to just or impactful just to look at portfolio companies where both co-founders or the sole founder is female, but actually what you want to look at is teams where there is at least a female co-founder, right? And for us, that's 38%. And I think that is to do with the platform support that people get. So I think that, we open up the funnel up front. We get 25% of the people who apply end up in our cohorts who are female. And then with the support that is provided with Antler and the fact that they're able to find their co-founders, quite a number of them. So the proportion is larger, 38% of them end up being teams where there is at least one female co-founder. And I think that this is very useful for us because obviously again echoing Sudeep's point earlier, which is that diverse teams actually end up with a much better commercial outcome, and it makes sense. At Antler itself, in senior management as well, we have about 40%, 40% who are female, which again could be better. We're always striving for more, but again, it just depends on the funnel that's coming through, right? So I just wanted to add these data points to you guys, which is, I think, Antler is in a unique position to observe what happens globally at an early founder stage on scale.
I'm just
Thank
going
you.
to
So
chime
do you
in.
foresee most VCs then wanting this diverse male-female ratio in founder teams?
Well, I think I don't know whether it's a question of wanting. I think that because we invest so early, right, we provide quite a good deal flow for later stage VCs. And when I say later stage, I mean really early stage, because we go before VC normally stops. So I think it's again, it's a supply situation, and I think things are changing now, where you end up with a lot more teams where there is diversity. One of the other things, and sorry, Elaine, and I'll pass on to you, which I think is very interesting, is that after the global financial crisis, I think there is a statistic that the most amount of people in the history of the GMAT test have taken GMATs and ended up doing an MBA. I think what we're going to see after already now, after this upheaval that we've had over the 18 months to 2 years, is that a lot of people are going to be thinking about giving it a go and becoming an entrepreneur. And the more people are doing it, the more likely it is that there's going to be a lot more diversity, not just female, male, but completely different educational backgrounds, and so on. Over to you, Elaine. Sorry, I cut you off.
No, Anja, I actually wanted to resonate with what you were saying, because I actually think Antler does a wonderful job, and I love the fact that you're having this diversity amongst your founder teams. I actually don't know if you know, I'm actually one of the Antler advisors. So.
I do, yeah.
So it also, I have come across some of the teams, and I think one thing that Antler does do it right is the fact that they provide, I think you provide sort of like a salary or so, or like a stipend to your founders, right? A grant funding to the founders. And I think this actually makes a huge difference in being able to get the women founders out there and starting a business. Because again, if you look at the roles, I think a big part of why we don't see all this funding going to women, or women coming out and starting their own businesses or getting funded, is because of the certain roles that culture applies on women, and expectations of the women's role in business, and women's role in society. And of course, the women typically are the ones who are the main caregivers in the family, the main people looking after the household. And I think this is a gender expectation that it's not just men that have it. Obviously, women embrace it as well, and it's not necessarily a bad thing, but it is what it is. There's the expectation that a career will always come in second place to family once you have kids, and I think there's a certain element of aversion to risk that women are more likely to have than men in some senses, because of this similar, and we can talk all we want about, like, being very enlightened or everything, and I'm very much all for women founders and everything, but I found even in my own life, it's so ingrained in me that I've absorbed these roles. Like I think I shared the story with you where last year when we were meant to have we were in a circuit breaker period, and we were in lockdown, and I'm running a business, and my business is very busy. My husband usually travels. He has his portfolio. He's a VC, and his portfolio companies are all around the world. So he's usually traveling a lot. But last year during the circuit breaker, he was in town. I was very busy with my business, and which is really impacted by COVID. And our kids needed to have home-based learning. And it made absolute sense for my husband to take it up, right? But when he did the homework with the kids, as a mother, I had so much mom guilt. And I think, again, it made no sense, because if you think about it, why should I feel guilty that I'm not the one who's doing the homework? But we've just absorbed that mentality of what our role in society has been. And I think this really holds back a lot of women. Partly it's a confidence, partly it's this risk, partly it's the expectation in culture. So what Antler has done by kind of taking out that element a little bit by allowing to be flexible, by allowing it to be to provide a grant to, make sure that, they're not having to worry about feeding the family. I think actually all this sort of plays a part in allowing women to come up and step up and do these things, right? And I would be disingenuous, honestly, if I were to just talk about roles and not mention that, I do have to say that there definitely are biases that do exist. Again, very often quite subconscious, but there are definite biases that exist. There are studies that have shown it. There's a Harvard study that has shown that, two teams pitched the exact same business to a group of investors. One is male, one is female founders pitching. And the male founder is more likely to get funded than the female founder. They've done the same thing where males and females with the same background go to get the loan at a bank. And the men with the same credit rating and everything is more likely to get a loan than the woman. And if the woman gets a loan, it's usually of a lower quantum. So whatever we may say about being enlightened, there are certain biases that are ingrained in us that do hamper the fact that, women have difficulties getting the funding. And, we really need to just say it out. I think we need to speak it so that people can be aware of the biases and to really raise up more female founders, female investors who've also been female founders who understand that it's absolutely, absolutely possible for you to run a business very successfully, for you to actually, female-led startups actually are more profitable on average than male-led startups, right? So if you look at the absolute numbers. And so I think these are things that we need to say out so that people are aware that biases do exist and they don't have a ground in them, and we need to raise up more female founders and more female VCs to invest in these founders. I'm very glad that Andrea and Virginia are on this call, and I'm sure they have a lot more to say than I do.
Yeah, no, thank you so much for bringing up the point on investment biases. I actually wanted to poke Sudeep's mind on how to challenge your own biases, and then when it comes to letting the capital flow, like how do you challenge your own biases, and how do you challenge the biases that are probably ingrained in the entrepreneurs and investors?
Thank you. So yeah, I think in terms of what we've just been talking about, it just reflects a key feature of early stage investing, which it is very opaque and very network driven, and minority groups, including women, are just underrepresented in those networks that have got the capital. From a startup O perspective, the way we've tried to address that is on, I guess, a couple of key features spring to mind. So one is, when it comes to assessing startups, we don't do it as a small group that sit in an office. We draw on a much broader network of over 100 experts who are around the globe, representing expertise in different industries as well as geographies and functional areas, such that when a company applies for funding or assessment, we can assign the right people to help assess it, and those assessors have to follow a quite structured approach to how they respond and assess the companies. And then we have, having now done this for 2,000 companies over 47 countries, we built algorithms as well to further help eliminate bias. The other key feature is moving away from this idea of the 5-minute pitch and trying to wow an audience in that 5-minute go. So that the assessments also take place over a Zoom call like this, which takes 45 minutes to an hour, focus on different areas. You have the option to say, I'll come back to you. Questions are pitched via email as well, and you get the time to think about your answer. And I think, again, these are some of the features that have been shown when it's on the spot 5 minutes. Statistically, it seems, for whatever reason, that seems to disadvantage certain groups. And so trying to level that playing field as well is what we see. From a personal investing perspective, I'd just say that it's less to do with gender bias and things like that, but just touching on some of the other things we've talked about. I personally just try to stay away from things I don't understand, no matter how exciting they may seem. And Virginia being an expert, I wish she'd been by my side when I was presented with an opportunity last year around alternative meats and a STEM-based approach to generating fish products. And I'd just done a lot of reading to my earlier comment about how easily swayed I am on what the area of focus is. But the reason I didn't invest in that company was I went on a call with the investor, with the founders and other potential investors. And the other people who were considering investing were food scientists. And I realized very quickly, I neither understood the questions being asked or the answers being given. And irrespective of how exciting I thought the opportunity was and how important the field is, I just thought I'm not qualified to make this kind of an investment decision. And if I want to focus on this, I should do it through funds or with other experts.
Yeah, Sandeep, I hear your pain. My IC, we invested in a plant-based food egg company earlier this year. My IC put me through 1 month of diligence just on the patent itself. So I'm with you on that. Yeah, I was not happy. Wan Ying, maybe I could share a little bit of my thoughts on investment biases. You know, and I think in particular, I'll obviously focus on women, right? I think for me, investment biases that I've seen fall within 3 categories. The first category is what I call outright just discrimination. The second one, I think, is what Sandeep actually rightly said about network-driven sort of fundraising patterns, right? So therefore, you know, which are closed. And then the third piece, you know, I really see is actually talking about what Elaine talks about women, sometimes a lack of confidence, you know, asking for less and therefore getting less. And I think there, you know, some thoughts on how I combat my own sort of investment, you know, biases when faced with these 3 things. So, you know, the first category is obviously the kind of blatant kind of sexist stories that you hear. They do exist, but in my experience, at least so far, it's actually the minority, but they are quite horrific. So examples that I've come across personally is, I know of ICs, you know, of very, very large funds, which have actually turned down a very, very good company with a female founder or CEO. And the IC's actual, one of their driving factors was the fact that the woman was age 37 and unmarried. And therefore they felt that she may probably have children in the future. And that is actually one of the main reasons why they turned down. I remember somebody at the IC telling me this, who was a woman, and I was actually shocked that this was a real consideration for them. Another one that I came across recently in my own portfolio, which mortified me, was when a lead investor, a very successful and famous lead investor, pulled out of the deal, which they had already signed papers with, because he realized that, you know, he's not going to have a special relationship with the founder. And I had to clean up a lot of the mess. I was actually quite shocked. I was personally shocked. This happened very recently here in Singapore. And, you know, so that to me is the first bit of investment bias. I'm not sure we can necessarily overcome that bit, except to not work with investors like that. The second piece of the investment bias is exactly what Sandeep said, right? And actually, before I went into venture capital, I think naively, you know, I really believe that inequality, actually. I think venture capital is the first time in my life when I start to realize that things are not equal, not just between men and women, but, you know, majority, minority, you know, groups, etc. One of the things that really actually pissed me off is that and now I can actually see it, you know, if you know, is because a lot of this, you know, VC funding in particular is driven by closed networks, right? So I see people being funded, and I know that their actual performance metrics are much, much less than the other person or the other company, but they're going to get funded because of who they are, and where they come from. And this is actually recently just pissed me off, because I'm just thinking, how about the untapped opportunity in the person that we miss, or in the company that we miss? And I see very often women falling into that category. And for me, it's just not an efficient use of capital. In the third category, in terms of investment biases, I've also noticed that women generally, you know, they pitch for less. Not necessarily because they think they're worth less, but because they don't want to pitch for too much. So, I see them going for half the valuation, raising half the amount of money. Maybe also because they're more capital efficient, but that's something definitely I see. And something that I have to ask myself is that, if I value this at 5 million, why am I not valuing something equivalent as at 5 million? Just because, you know, like there's been a couple of times where I revised the valuation because I just felt, you know, this is not necessarily fair, right? And I think these are just things, and I think when somebody values themselves as less, you as an investor, right? I think it's not just combating investment biases in favor of a group or a woman versus a man, but it's actually really asking yourself, what are you really paying for? Are you overpaying for things sometimes? You know, and I think a good investor can really tell, you know, which entrepreneur is actually bluffing, and which investment is really value, and I think that to me, falls within combating a lot of these investment biases. Actually, where should we really be putting our capital to use? What's a more efficient use of capital, as opposed to just chasing the herd? Because you want to talk about, for example, food tech, a company that nobody wanted last year, is going to be worth more than $100 million this year. So if we had not actually put money into that company, that would have been untapped. That would, so I think that's the way I actually see investment biases. Yeah. And I think the conversation needs to be less on equality and a lot more on opportunity, because that's what capital chases. Capital chases opportunity, whether you're investing with purpose or not. Yeah.
I love that. Thank you so much. Thank you. Honestly, very, very, very raw and very amazing sharing. In fact, actually, you are the reason why the title of this event changed. It was to be an event on gender lens investing, and then it went to biases, and it went to pitfalls, and it went to, so it's done a whole journey because of your raw sharing, and because gender can be a strength, but it can be also a detractor. But you're right. Let's focus more on the opportunity with purpose. So I wanted to thank you all very much for joining us today for BritCham's webinar. We hope you leave us today with practical mind nuggets, and hope to see you soon at our next event. Thank you to all the speakers for taking part, and please do take the time to fill in the survey that Sabina and team will be providing to you. Thank you so much, and have a wonderful day, everybody.